Hello and welcome to Midas Markets Daily News. Let's kick off your trading day with the latest financial news and market headlines.
Hi traders, this is Jason with the market update. The US dollar index climbed to around 98.9 on Thursday, its highest level since December 9, as investors weighed mixed US economic data and reassessed the Federal Reserve's policy outlook. Initial jobless claims edged up slightly to 208,000, while December layoffs fell to their lowest level since mid-2024, signaling a resilient labour market. WTI crude jumped more than 3.5% on Thursday, rising above $58.3 as prices rebounded from 2 days of losses. The move followed a surprise draw of 3.8 million barrels in US crude inventories, easing concerns over oversupply. Uncertainty around Venezuelan exports resurfaced after Washington outlined tighter controls and sanctions enforcement. However, rising stockpiles at Cushing and higher gasoline and distillate inventories capped further upside. Spot gold traded near $4,470 on Thursday after falling nearly 1% in the previous session as investors took profits following the recent rally. Losses were limited by weaker than expected US labour data, which reinforced expectations for Fed rate cuts later this year. Softer job openings and slower private hiring supported the outlook. Markets are now focused on Friday's US payrolls report, while ongoing geopolitical tensions continue to underpin safe haven demand. Dollar yen hovered just below the 157 level on Thursday, extending gains for a third consecutive session as a stronger US dollar and rising geopolitical risks weighed on the yen. Mixed US data offered limited clarity on the Fed's path, while regional tensions added pressure. Domestically, Japan's real wages fell sharply in November, complicating the Bank of Japan's tightening plans, despite policymakers reaffirming their willingness to raise rates if conditions allow. Eurodollar showed early signs of stabilization near the 1.17 level, though overall downside momentum remains intact ahead of Friday's key US jobs report. The pair has traded in a choppy range since slipping from late December highs above 1.18. Weaker Eurozone inflation data and falling bond yields, alongside soft US ADP employment figures, have kept price action directionless, with markets reluctant to take strong positions before the non-farm payrolls release.
We hope you enjoyed today's market outlook. If you have any questions, feel free to leave a comment below. Remember to join us tomorrow morning for the freshest news.